Talking about tools for the forward-thinking investor like you in 2019. There are a number of different products and investment platforms that exist. We'll give you a brief overview of what we're using and why, ensuring that you're in the right asset classes and using different products to make sure that you're invested in the most effective portfolio possible and protected when one asset class drops. Tools for the forward-thinking investor in 2019. Here we go. Start with an agenda. So with the agenda, we'll go over who I am, who is Alt-Asset Allocation, what we stand for. Then we'll talk about a brief overview of what you need to think about before you start investing. And then we'll go into the different platforms and tools that you can use to be a more effective investor in 2019. Who am I? My name's Ben Lakoff. I'm an entrepreneur and investor. I have quite a diverse background across finance, so within corporate finance, M&A, investments, banking, most recently over the last 2.5 years, entrepreneurship. I have quite a global perspective, so I've lived and worked in the USA, Latin America, Middle East, Asia, and most recently in Europe. I have my Chartered Financial Analyst designation, or CFA, and I wholeheartedly, genuinely enjoy looking into and discussing investments. What is alt-asset allocation? So alt-asset allocation exists to help open investors' eyes to global investments beyond what's offered by traditional brokerage, like stocks and bonds. So our mission is to educate and present investment options for the forward-thinking, non-accredited investor like you. There's a disclaimer, so please read it. There's a link on our website, but this presentation is provided for informational purposes only, and this presentation does not constitute investment advice, financial advice, or trading advice. The full disclaimer is available on our website. So before we start, it's always important to start with making sure that everybody is aligned. So what is an investment? What does this mean? An investment is defined as the act of committing capital or money to an endeavor with the expectation of obtaining an additional income or profit. It's textbook explanation. I also like the one by Warren Buffett, who defines investing as the process of laying out money now to receive more money in the future. So it's really about delayed gratification, putting your money to work now and expecting more in the future. Prior to investing, it's very important to understand why you invest. So finding out your why, what reasons you're investing, is very, very important. It determines what kind of strategy you'll come up with, and really everything that you need to do before comes from this why. A big why for a lot of people is the idea of compounding interest. So what this means very simply is it's the return not only on that saved amount or the investment, but also the accumulated interest on that investment. So over time, there's a bit of exponential growth that occurs. Albert Einstein was once said to have explained compounding interest as the eighth wonder of the world. So this is a great argument for starting as early as possible, and that is making the assumption that you're returning a positive interest rate or a positive rate of return on your investments. This is just a nice little visual representation of what compounding interest looks like. There's a number of different examples in the blog post, but I encourage you to do some research, and really the key takeaway here is starting as early as possible will have the most profound impact on your investment, assuming you have a positive rate of return. So finding out why you're investing is important, but what else is important before you start to invest? So prior to investing anything, it's really important to know your why and to really know yourself. So what is your current state, your assets and your liabilities? What is your current income source like? Is it a very steady, stable job, or is it something a little bit more risky, perhaps a startup? So the risk of your future cash flows is all flowing into that. Knowing your current state, so what does your personal P&L look like, your assets and your liabilities? What financial goals do you have? Are you planning on putting this money away for retirement, which is 50 years away? Or do you want to remove this money from your investment in 1 to 2 months to buy a house, perhaps? Do you have any large planned incomes or expenses? Perhaps something like an inheritance or a wedding, some large expense like that. And then further, really understanding your risk tolerance as an investor. So when the stock market goes down by 20%, do you freak out and try to sell everything? Or do you understand that, hey, I'm in this for the long run, ups and downs happen, and my investment time horizon is 40 years, so I know over this longer period of time, the stock market is most likely to go up. So really understanding yourself here, and it's tough to understand yourself. You have to just go through some of these market cycles and see how you react to them. Because traditionally with risk tolerance, you answer a few questions, like 5 questions, and you might come out as risky, but then the stock market turns or whatever investment you're in goes sour, and then you find out really quickly that you're not, in fact, a risky investor, and you don't like losses as much as you thought you might have with that little questionnaire. So it's important to really update this constantly. What is your risk tolerance? What do you think is the appropriate amount of risk for you to take with your investments? This was from a presentation. I'll remove it. So what type of investments are out there? There are a number of different investments. Going back to the definition of investing, it's putting anything into something now, expecting more in the future. So investments can be a number of different things. Typically, financial investments are classified into equity or debt. They can also be described as traditional or alternative, income or growth, safe investments, or more speculative. So something safe would be governmental bonds. It's very unlikely that a government will default on their loans or their obligations. Some do. And then more speculative. So how risky is it? How untested or new is it? Liquidity is a big thing. So if you invest in this, can you convert it to cash very easily? Or is there a longer lockup and maybe you don't have access to some sort of secondary market that allows you to sell this investment before the end of the period of time in which you're holding it? Is this a shorter term or a longer term investment? Is it expected to pay out earlier or over a longer period of time? And then another one would be taxable or tax advantaged accounts. So is this taxed as ordinary income, ordinary gains, or have you put this into some sort of individual retirement account that means it's a little bit more tax advantaged and might grow tax deferred or tax free until you pull it out? Another concept to understand before investing is diversification and asset allocation. Now, there's a ton written about this, but at its most basic level, diversification is not putting all of your eggs in one basket. So there's a ton of math and complication that arises from this, but you have a few different buckets of investments, and then you can put some assets into a more safe bucket and some assets into a more speculative or risky bucket. But the idea is that these buckets all move slightly differently and have different expected returns. So if you put money in cash, you expect it to be a little bit more safe, more liquid, and thus it would have lower returns. If you put it into something like an emerging market equity, so some shares in a company in an emerging market, such as somewhere in Latin America, then you expect that that has a little bit more risk associated with it, and thus you should be compensated with a little bit more return. So this is the key concept. With all of this, not having all of your eggs in one basket, if one investment sours or goes the wrong way, what happens to those other assets? Does it balance it out? Does one zig when the other zags? And really putting these all together is a way of thinking about your asset allocation. Lastly, follow us for more at Invest in Alts on all of the socials, so Instagram, Facebook, and Twitter. We're putting out a number of different content pieces, experimenting with video
or slides or blog posts. We always will have a long form blog post associated with these videos, so you can follow along and find links and more information to everything we talked about in the video.
Thanks for watching. More and more investment opportunities and products exist, and more are created every single day. These products are giving investors access to previously hard to get or non-existent tools and investments. We're cutting through the noise to deliver viable options to the forward-thinking investor like you. Thanks for watching.